What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Celsius Holdings, ticker symbol CELH. This was a viewer's request, and thank you for your donation. I will first be going over what I see in the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So let's take a look at Celsius. What is it doing? Well, it had a double top back here at the $99 level. 99.62, and ever since then it has been collapsing basically. Since the top has dropped about 77%, 78%, and it does not look like it's stopping anytime soon, and it could be possibly headed towards the $14 level. Why? Because that's where the strong support is at. So the price is trying to sniff out strong support, and you can see that this was definitely a strong support level because it was price bounced off it several times. One right here, this was very close, so that's 2, 3, 4, 5 times price could not surpass it. So there's a good chance price is coming back down to that level once again. Also, price was previously in a downward trend line, as you can see here, represented by this black line. But no, it's no longer below that trend line. However, it's inside of this downward channel now. So it's still in a downtrend, just not as steep. So this is kind of like a spiking channel, more of a 45-degree angle. We can measure the angle. You can see that this is about a 33-degree angle. So not that strong, but nonetheless, it is still bearish. Price is below the EMA. Price broke through that $27, $28 level, which is also prior support. As you can see here in the historical sense, this was support and this was support. Price traded all the way down to the same level after so many years, and you can see how it reacts to it, right? It was still trying to maintain support above it. The trend was so strong and too strong that it broke, and now it's acting as resistance now. So overall, the trend is bearish. We are breaking support and making resistance out of it. We're below the EMA, and we're headed towards stronger support at the $14 level. And also, that's right where the measurement target is currently at. So we have one large leg down right here. If you drag this over to the correction, this is the second leg down, and that's right around the $14.95 level. So again, looking for the $14 level. Also, if price hits one side of a channel, it'll work its way to the opposite side, which is right around, $17, $18, $17 to $18. So overall, just a bearish looking chart. I think we're going to see a lower prices, and I would not be looking at any long-term targets to the upside until this can bottom. Until we see price get back above the $28 level, it's bearish. I mean, it's just bearish. It entered bearish territory. So this was all bearish territory right here if price falls, and it did. And now it's coming back all the way down to the lower side of the trend line of the horizontal level. How do I know that? Based on experience and based on where it's headed. It's headed lower, so it's headed lower somewhere. And it's not just random areas on the chart. You can use tools that have been proven to be higher probability, and that will map it to the next level, which is right here at the $14 level. So that's where it's headed, and there's a good chance we can see price get there. Is it guaranteed? No, nothing's guaranteed in the market. Sometimes, for some reason, you missed it on the chart, but we bottom and then we just reverse higher. Do I see that happening right now? No, I don't. And it would take a lot for the stock to do that. You need to get back above the $28 level because, as you can see here, it was previously support. Now it's acting as resistance. And then let's see what happens at the $14 level. If that doesn't hold, I mean, this thing can go even lower. So again, I'm not saying that would be the bottom either, but it has a better chance of being a bottom than it is where we are right now. So overall, earnings report is also coming out. It looks like in 16 days. Stock is bearish, and traders don't care about the fundamentals, even though that this is doing pretty well. I've noticed, the annual revenue is increasing, and they're profitable last year, or actually 2023. Traders don't care. Like, how is a day trader going to look at the fundamentals and make a decision in one day? You don't need to do that. You can just look at the technicals and say, hey, it's bearish, I'm going short. It's not that simple, right? But they're setting up for shorts where price is below this trend line. So traders, they don't have to look at the fundamentals if they're trading in and out intraday, or even for a couple of days, or even a couple of weeks. What does earnings have to do with holding a stock for 2 weeks when you know the direction? Nothing. They don't care about that stuff. So there's a lot of short-term traders that are going short and they're riding it down. Even long-term traders, they're like, well, fundamental good or not, it's bearish, so I'm going to also hop in on the bearish trend. So again, it's hard to reverse a trend because everyone keeps on piling it into it until it reaches a level that it cannot surpass. Until then, it's bearish. So again, that level could be the $14 level because it has been a a floor in the past, but we'll just have to wait and see. So all I have for CELH, Celsius Holdings, is Vee Trades, and thank you for your time.